Hello everyone. Yes, I just started saying stuff. Noah, don't worry. Today we're discussing the UK official bank rate and also votes. That's why we started a little bit earlier than always. It will take us some 13-14 minutes to discuss everything. Yeah, in 13 minutes we will have the numbers and the votes coming out. As you can see, the current moment forecast is at 0.5, while the prior figure was also at 0.5, so there is no doubt that the BoE will actually leave its policy stance unchanged. In February, the base rate will have been sitting at the rock bottom of 0.5% for nearly 7 years, and only Ian McCafferty is still seen as remaining the only, dissenter voting for an immediate rate hike. As you can see here, very interesting chart, which is unchanged. Anyway, morning everyone. Hello, good afternoon, or wherever you are. So let's talk about the historical movement of this reading. Here, I think it's very important to say that ever since November 2014, the Bank of England forecasts have been turning increasingly dovish, reflecting ongoing headwinds and weak price pressures, thus pushing inflation outlook lower and lower until it seemed like the next possible move on the rates as well might as well be a cut. The central view of the Monetary Policy Committee appears more balanced, although not all MPC's members have recently expressed their views in person on both inflation and growth outlook. However, talking about the vote distribution, the balance of views of the MPC has so far been broadly even. On the Dove side, we see Governor Mark Carney persistently offering his cautious views on both domestic and external economic financial market developments, but also based on their most recent comments and public speeches. For example, Fliege, Helding, Broadbent, and Shafiq also stand more on the dovish side. At the other side of the committee's spectrum, there are hawks with a more upbeat view on domestic price pressures. First, of course, is Ian McCafferty, who has been voting for a rate hike since August already. Martin Wheel may very well join, also him sooner or later voting for the hike, given his most recent comments on wage pressures, for example. Also Forbes and Cunliffe, if I'm pronouncing it correctly, also maintain their views that the trade should go up sooner or later. Actually, sooner rather than later, in fact. Okay, let's move on. Here is also a very, interesting chart where everybody is voting for unchanged rates. Yes, the total number of estimates was at 41, while the other estimates, stood and stand still at 0.5%. Here, okay, Wilco. Here we also have different experts. For example, Robert Wood from Bank of America Merrill Lynch told last week that the BoE is currently firmly in wait-and-see mode. Softer wage growth, global worries, and weakening economic growth than a year ago or two give the BoE plenty of reasons to wait. Weak inflation gives them plenty of room to wait, for example. We look for the first BoE hike in November, they say. The risks are skewed to delay in our view. That was a quote from Merrill Lynch. Then also Mr. Pickering of Bannerberg Bank in London wrote on Thursday that the BoE is likely to indicate markets are too dovish on rate hike outlook. Yep, so low inflation recently weakening of wage growth, growing concerns about the global economy, and the Brexit risks will keep the dovish BoE on hold until at least November, in the view of this bank. And of course, our dearest community, they are also bearish on the sterling against the dollar at 53.7 bearish votes versus only 46.3, I'm sorry, bullish votes. So here you also can see a couple of comments, but Max asked me to give you more time to speak this time. So please, Max, if you're ready, you're welcome.
Thank you very much, Kate. Hello, everybody. So the Super Thursday, one more, is here. We have the Bank of England's rate decision today. And why it is Super Thursday? Because the Bank of England also is going to publish its fresh inflation report, where it is going to make new expectations, new projections about the economic growth in Britain, and of course inflation, and everyone is basically watching that, and it is also going to be published in some 6 minutes from now. And by the way, Mark Carney will be speaking later in some 45 minutes from now, so at 12, basically 45 p.m. GMT. And everyone is also going to watch that press conference. The Bank of England is expected to be quite dovish this time, and I have even seen some research from Morgan Stanley, and they said that now their expectation says that they will not hike rates for the next 2 years. And this is also a possibility for Mark Carney to say that, guys, you are very, very dovish right now, as Kate has just already mentioned. So, guys, you are very dovish, and we are still probably going to hike in 2016. So it is very interesting to see. Speaking about the trading strategy right now, we are actually watching the bank rate vote exactly in 5 minutes from now. It is also possible that Ian McCafferty will vote in favor of keeping the rates unchanged, so he will drop his stance about hiking rates by 25 basis points, and it is likely to cause reaction, of course, in case it happens. So strategy. As you can see, we have quite a negative expectation right now for the cable, even though the market sentiment tends to be basically neutral right now. There is a slight just advantage among bearish market participants, although the pending orders in both 50 and 100 pip ranges from the spot price are set to sell the sterling against the US dollar in still the quite a majority of all the cases, 54 and 66% of them respectively. Okay, moving on to the current market situation. As you can see, the pair is trading right now just exactly at 1.46 level, but in case we take the development of the pair in, let's say, the last 1 hour, the cable actually has dropped quite significantly by around 60 pips, possibly reflecting already some pre-reaction for this data release. But we will see that in some 3 minutes from now if there is market reaction. But it should be, because the historical development shows us that reactions on the even no change in bank interest rates, in the Bank of England interest rates, it brought us some reactions, and they ranged from 26 pips in October and up to 64 pips back in November, and it makes the average for the last 5 months at 45 pips, so should be quite a strong reaction. Hopefully it will take place. Speaking about the main supports and resistances for current trade, as you can see, the first support is the level of 1.4550, which is just exactly 45 pips below the current spot, and it is the daily pivot point, so quite an important support for the pair. And the second one, which is the weekly R2, it follows just some 10 to 12, possibly 15 pips a bit below the first take profit, and the third one in case we have a very dovish stance from the BoE, of course, in case it can decide to reduce interest rates as well. So that's a possibility. Somebody also speculated about that. In this case, of course, the pound is very likely to drop even more. In case, of course, the less likely scenario takes place, in case the Bank of England is more hawkish than it is expected, especially when Mark Carney speaks in 45 minutes, then the pound can also start recovering quite significantly. But we will see that a bit later when Mark Carney speaks indeed. So we will know that only in some time in the future. So I just have 1 minute left until the data will be finally released in the chat section. We will see numbers for the official bank rate votes, possibly also for the asset purchase facility, which is less important one, but of course also is important. And of course the distribution between the votes of the MPC members. Before that, I will just shortly mention the technical indicators, which, by the way, are pointing to the upside right now, not only on the 30-minute time frame, but also on the 4-hour and hourly time frames. So they are quite contradictory to what the market is predicting for the dovish Bank of England this time. Okay, we have 15 seconds to go until we will know the decision of the Bank of England on its rates and on the other important indicators, including publication of the inflation report. Headlines of it are usually published immediately. So yes, as we can see, we have a downward reaction from the cable, exactly down to the first take profit level. So the rates are, of course, unchanged, which was widely predicted, as Katerina has already said. And speaking about the distribution of votes, so yes, indeed, 009, the distribution. So then it makes complete sense why the cable is dropping. So Ian McCafferty decided to keep the rates unchanged. So, and the Bank of England is again dovish. Yeah, by the way, 2 years ago, the Bank of England already also attempted, some of the MPC members attempted to vote in favor of hiking, but then they dropped this stance, and now it repeats once again. We will see what we will hear from Mark Carney in 45 minutes, what he is going to say to us. So the initial reaction, of course, is downward from the cable. Overall, the currency pair has declined by some 55 pips and reached the first support in face of the daily pivot point, and has a bit rebounded from that important level. Okay, I guess that will be all from my side today on the Bank of England rate decision. Thank you very much for listening. I wish you all a great day ahead. See you all tomorrow, and I give the floor back to you, Kate.
Thank you, Max. So, guys, you can see reactions still. No, you cannot. You can again. All right. So the distribution of votes was, well, it was kind of predicted, but still we thought that McCafferty would vote in favor of hike, but he didn't. So let's let's say bye for now. Today we don't have any releases, if I'm not mistaken. That's why we're saying bye for today, and see you tomorrow with the US employment report. Thank you guys, and bye.